Hello, this is your European Open briefing for Friday, June 10th. My name is Michael Florentiades. I'm the Chief Economist here at xm.com. So, what are the key points today? The US dollar is rebounding after some heavy losses the previous days. I would also like to draw your attention to the fact that Euro Yen made a fresh 3.25-year low. Oil prices also have dipped below $50, and this has been combined with some risk-off moves in stock markets. Data-wise, it's a relatively light calendar. The focus, I think, is on next week's central bank meetings. We haven't looked at euro-dollar for a while because it has not been doing much. We had steep losses for euro-dollar from the 114 level down to all the way to 113 during yesterday's trading. The exact catalyst is unclear. Yes, we had a speech by Mario Draghi, who sounded concerned yesterday about the region's economy. He urged more action by politicians, but it's unclear whether monetary policy would pick up the slack if there was no action coming from politicians in terms of fiscal policy, structural reforms. So that gave a little note of concern and a little bearish about the Eurozone economy. Another piece of news was that the Commerzbank was said to be stashing billions in cash in vaults in order to avoid the ECB's negative interest rates. So there is this question now, are negative rates really effective, or are they ineffective? That's a big question. If banks are stashing their billions in vaults, then not much point to negative rates, something they could do, of course, anyway. So it just adds to the sense of skepticism if what the central banks are doing is working. Now, I think that this drop is also a confirmation that the pair is still in a range pattern, since even the bearish jobs number from the US and the prospect of a no rate hike in the summer did not lead to a break on the upside for euro dollar. It tested, tried to break above 114. It briefly did, but then it came back. So I think euro dollar very much still in a range. What is not in a range is euro yen, which made a new 3.25-year low. This, I think, mainly shows the attractiveness of the yen as a safe haven. These moves are taking place, of course, ahead of the Bank of Japan meeting next week, where we may get extra stimulus, which would, in theory, should be weakening the yen. But it's also ahead of the UK referendum. As we said here before many times, the Swiss franc and the yen are expected to be the main beneficiaries of any turmoil related to Brexit or any worries about that. And like we said a few days ago, when there was another 3-year low for euro yen, the 120 level was acting like a magnet, and indeed we see trading very close to 120 or 120.29. So we might see a battle for 120 beginning in earnest. Now, the US contract, WTI oil, fell below $50 a barrel. This was not related to any fundamental news. There wasn't anything really big happening in the oil market, but there has been the stronger dollar. There has also been, I believe, some profit taking as oil went up maybe too much, too fast. So it's also might be related to some risk off. We had some negative moves in stock exchanges. Nothing too dramatic, but we have seen this correlation between equities and oil holding, and equities were also down and that was a risk aversion mood overall. On to the calendar, as we said, not so many news. We had wholesale prices in Japan. They were a little better than expected earlier today. We also had the German final consumer prices. They were bang in line with the estimates and the preliminary numbers, the flash numbers. And also we will be expecting the Canadian employment report might move the loonie. And the last but certainly not least, maybe the highlight of the day, will be the University of Michigan consumer sentiment, the preliminary figures. The consumer definitely very, very important in the US because as we said with the weak jobs numbers, yesterday we had some positive jobless claims. This restored confidence that maybe the jobs number was just a blip. So we'll see how the consumer is feeling today with the University of Michigan numbers. But overall, there shouldn't be too much excitement today. We're not expecting many sharp moves because China was also on holiday today, so Asian trading was already thin, and the market is definitely awaiting the very, very key events next week, which are the Fed and the Bank of Japan meetings around the middle of the week, and in 2 weeks' time, of course, the UK referendum. So we see a lot of focus on these events, and probably what we're going to see over the next few days is position adjusting for market participants to go into those events feeling comfortable with the risk that they have, and some will probably to minimize some of the risk, but these are very key. Of course, the Fed is probably not going to do anything, possibility is not going to do anything. That's pretty much discounted. We'll see from the statement though, and maybe any dissenters. The Bank of Japan is more probable that we'll get a move, and we'll have the UK referendum, which maybe, according to some analysts, maybe the markets are a little too complacent about referendums. There's a high chance of Brexit actually happening. So, but the market is at the moment not pricing in such a scenario, despite the some drops that we have seen in the pound. So, with those thoughts, I leave you for today. Thank you very much for watching, and have a great day.